I see that you believe that the commodity currencies, like the Aussie, the Loonie, the Norwegian kroner and the ruble should benefit from higher global economic growth this year along with higher oil prices. So figure me this, why has the Australian dollar therefore been gasping for air so much lately? And if you think that it is going to appreciate, is now the time to buy it?
Look, I would first start by saying that, yes, now is the time to buy the Aussie dollar. From a cyclical standpoint, we will see an improvement in, as I said, in this sort of synchronized global growth pitch as we go into the third quarter of this year. It has been delayed by some of the issues we've seen, particularly in Europe, but that is still coming. What we have seen is that commodity prices such as copper, which the Aussie dollar is highly correlated with, have also been stepping back. So this sort of step back in the Aussie dollar broadly has been in line with the rest of the sort of the macro sort of indicators that would traditionally see the Aussie dollar moving higher. So as we look into the second half of the year, I think obviously domestically, Australia is doing terribly well. And the growth numbers, housing, construction numbers, etc., all underpin that jobs growth is going to continue to expand quite rapidly in Australia. On the international front, while the sort of risk-on sentiment's taking a bit of a stumble right now, we think that will begin to move more in an upward fashion into the second half. And the Aussie dollar is a great reflection of that. The Aussie dollar actually and the commodity currencies have held up reasonably well compared to some of the other crosses that we've seen. So we would certainly get in behind buying the Aussie dollar here. We also like the pound as well. And just the commodity currencies more generally, we think they can benefit from the higher oil prices and the rebound in copper that we expect. Of course, iron ore prices have been very high, and that's been supporting the currency to some degree. We do think that iron ore prices will start to move a bit lower as we get into the end of the year. Brazil exports of iron ore begin to pick up pace.
Right.
But we have to remember at the same time that steel prices are moving quite quickly higher in China. That's improving steel mill margins. So we think underlying demand for iron ore will continue to be very robust, which will also support the Aussie dollar higher.